The personal saving rate, calculated as personal saving as a percentage of disposable personal income, rose to 4.5%. This indicates that Americans are saving a larger portion of their income. The decrease in both income and spending could signal a slowdown in consumer-driven economic activity. Such shifts in consumer behavior are closely monitored by economists for their implications on overall economic growth.
United States job market shows underlying weakness despite strong June gains. Government and healthcare sectors lead employment growth, but overall labor force shrinks and manufacturing jobs decline, hinting at potential economic headwinds. The United States economy added 147,000 jobs in June, surpassing analyst expectations. This figure represents a modest increase from the 144,000 jobs added in May. The unemployment rate also saw a slight decrease, ticking down to 4.1% from 4.2% in the previous month. However, a closer look at the data reveals some underlying concerns within the labor market. The overall labor force experienced a contraction, shrinking by 130,000 individuals in June, following a larger decline in May. Government jobs, particularly at the state and local levels, were a significant driver of the gains, contributing 73,000 new positions. The healthcare sector also showed robust growth, adding 39,000 jobs. Conversely, the manufacturing sector continued its downward trend, shedding 7,000 jobs for the third consecutive month. This decline in manufacturing employment raises questions about the broader impact of current economic policies. While the headline numbers appear strong, the reduction in the labor force and the ongoing job losses in manufacturing suggest a more complex picture for the American economy.
Federal Reserve navigates economic data and political scrutiny. The central bank continues to assess economic indicators, including job growth and inflation, while facing ongoing criticism regarding its monetary policy decisions. The Federal Reserve is currently at a critical juncture, carefully evaluating various economic reports to inform its monetary policy decisions. Central bankers are particularly focused on key indicators such as non-farm payrolls, the unemployment rate, and wage growth, as these provide crucial insights into the health and momentum of the economy. Strong job growth, for instance, could signal a robust economy but might also raise concerns about potential inflation, influencing the Federal Reserve's stance on interest rates. Conversely, rising unemployment could suggest an economic slowdown, potentially leading to considerations for rate adjustments. The institution is also navigating persistent political pressure, with the President of the United States repeatedly calling for the Federal Reserve Chair to resign due to disagreements over interest rate policies. Despite this external scrutiny, the Federal Reserve Chair has consistently maintained that the central bank will keep its key interest rate steady as it assesses the impact of new tariff policies on the broader economy. Most members of the Federal Reserve still projected at least 2 interest rate reductions this year during their June meeting, indicating a cautious but forward-looking approach to economic management.
The United States trade imbalance grows substantially in May. The goods and services deficit expanded significantly as exports experienced a larger decline compared to imports. The United States goods and services trade deficit saw a notable increase in May 2025, according to joint reports from the United States Bureau of Economic Analysis and the United States Census Bureau. The deficit rose to $71.5 billion in May, a substantial increase from the revised $60.3 billion recorded in April. This expansion of the trade imbalance was primarily driven by a more significant decrease in exports compared to imports during the month. Specifically, the deficit in goods increased by $11.2 billion, reaching $97.5 billion. Concurrently, the surplus in services experienced a slight reduction, decreasing by $0.1 billion to $26 billion. On a year-to-date basis, the goods and services deficit has surged by $175 billion, representing a 4% increase from the same period in the previous year. Exports have increased by $73.6 billion, or 5.5%, while imports have risen by $248.7 billion, or 14.8%, over the same period. The average goods and services deficit for the 3 months ending in May also decreased, indicating a broader trend in trade flows.
American labor market shows resilience with strong June job gains. The United States economy added more jobs than anticipated in June, with the unemployment rate slightly decreasing despite ongoing economic uncertainties. The United States economy demonstrated surprising resilience in June, as employers added 147,000 jobs, surpassing analyst expectations. This positive development indicates a stable labor market, even amidst lingering economic uncertainties influenced by current policies. The Department of Labor released these figures, which were published a day earlier than usual due to the Independence Day holiday. The data revealed that the unemployment rate experienced a slight decrease, ticking down by 0.1 percentage points from May to reach 4.1%, while the average work week was shorter last month, suggesting that businesses might be adjusting hours in response to economic headwinds. The overall job growth was robust. Gains in employment were particularly notable in the government sector, especially at the state and local levels, which collectively added 73,000 positions. The healthcare sector also contributed significantly to the job growth, adding 39,000 jobs, although the manufacturing sector saw a slight reduction in jobs for the third